Hey, this is Cedric Youngelman, your host of the Bitcoin Matrix podcast. Thank you so much for checking out my show, where we have philosophical conversations about the economic, societal, and cultural implications of Bitcoin and the future of money. Please make sure that you're subscribed to the Bitcoin Matrix. And if you're watching this on YouTube, smash that like button so that more people see it, and put those notifications on so you don't miss out on any fresh and dope content. This episode with Tuur Demeester about bear market psychology, making haste slowly, and the Bitcoin Reformation is brought to you by River Financial. I'm able to produce this show in part thanks to my sponsors, and I'm very selective about who I work with. Set up zero-fee DCA with River. I love River because they are a Bitcoin-only company, and they make it simple to leave the next generation better off than our own. To get started and find out for yourself, use the link in the show notes and get up to $10,000 free when you buy Bitcoin and miners at river.com. CoinKite is launching a newer, higher-end cold card featuring a full QWERTY keyboard, a larger LCD screen, and a QR code scanner. The cold card Q1 will also be battery-powered. The cold card Q1 resembles the historic BlackBerry. A gray stealth body encloses the secure elements introduced with the MK4, which was launched last year. The Q1 takes things a step further from the MK4. It also includes a flashlight. The new cold card Q1 is available for pre-sale. At the end of the 16th century, a ragtag group of rebel intellectuals and entrepreneurs founded a country on some of the least desirable land in Europe, so often flooded that it needed hundreds of miles of moats while fighting an 80-year-long war against the largest empire in the world. From this struggle and melting pot of ideas emerged the Dutch and British Golden Ages, innovative economic institutions that changed the world, as well as one of America's most successful socio-economic experiments, New York City. Tuur makes the case that the 21st century emergence of Bitcoin, encryption, the internet, and millennials are more than just trends. They herald a wave of change that exhibits similar dynamics as the revolution that took place in Europe. So now let's enter the Bitcoin matrix with Tuur to find out more about the Bitcoin Reformation.
What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Tuur Demeester is a world-renowned economist, investor, and longtime Bitcoin analyst. Tuur is the founder of Adamant Research. Tuur is also on the board of the Texas Bitcoin Foundation, and he's an advisor to Blockstream. He believes that we should make haste slowly. Tuur Demeester, welcome to the Bitcoin Matrix. How are you?
Hi, Cedric. Good to be here. I'm good, thanks.
Yeah, I'm excited to chat. I did get to see you at Bitcoin 2022. I was in the audience, but you were on stage interviewing Jordan Peterson live.
Oh yeah, that's true. I did that. Yeah.
Yeah.
That was
What was that experience like? It was a great conversation.
Well, it was surreal because it was just the biggest audience I've ever been on stage in front of. Like that, it was just like, I don't know, it was like an ocean of people. And then I was hoping to be able to have a little bit of chit chat with him beforehand, but he literally arrived, I want to say 120 seconds before we went on stage. And so it was a little bit kind of like, being thrown in the deep end. I'm mostly like, I'm glad that people apparently enjoyed it. So that the questions were good. And then I think to me, it's mostly like, just having done something like that, it just takes away some of the nervousness to do other stuff on stage, because it's kind of like, it doesn't really get much bigger than that.
Yeah, I thought
for me, it doesn't.
Yeah, I mean, it was a big performance. I thought your performance was great in a lot of ways. I think you had great questions, but I think you also had great responses. And I think it was very interesting, the conversation where I think he was doing some learning in real time. And I think that was fascinating to watch. but I think you were help guiding that process a bit and kind of keeping him within, the lane of what Bitcoin is and isn't, and kind of back and forth really well.
Yeah, I think he's definitely still learning. Like, yeah, that's my experience, is that he's juggling so many different things. Like, I think the two nights before that, he was doing like a 1 hour presentation on something like pretty arcane, like about like the biology of the eye or something like that. And like, so he just like goes all over the place, although he did do a really awesome in-depth conversation, well, with Saifuddin Ammous, which was about Bitcoin, but then also with Robert Murphy about Austrian economics. And really, like, he was really being the student and really absorbing all this stuff. So yeah, I do think, and of course, Bitcoin, the price was crazy high, and he's like in front of this huge audience of like investors and entrepreneurs. So I think it's understandable he was being a bit cautious, and what he was saying. And but yeah, I was definitely surprised at some of the answers. I loved what he said about entrepreneurship. That was awesome, because I think it's so many intellectuals don't come from that world and don't really have an appreciation for what it takes and why it's so important and valuable. So that's, to me, that was the killer. Like, I was so glad we got that in there. Yeah, then that I heard that.
Yeah, it's interesting that you brought that up. It was one of my first times really getting to see him, either live or recorded, and just kind of taking in his perspective. I thought his defensive entrepreneurship and really capitalism was astounding. That was kind of my greatest takeaway from it.
Yeah. And it's also one of these things, like we in school, like, not saying that these people mean bad or whatever, but a teacher is usually not versed in the world of literally capitalism, and so they tend to be afraid of it. They tend to they tend to think of it as maybe even something bad, whereas like it's literally just free voluntary interactions, just win-win interactions. That's all capitalism really is.
Yeah, and he really seemed to see the synergistic effects of that. He is extremely verbose. I wonder, he can be a little word salady for me at times, where I'm not sure. It's a little bit the art of articulation that he can dabble in, I think.
Yeah, I mean, it's one of these things where I think everybody has their own style of doing things. Like, I really got into Ludwig von Mises in my 20s, and holy hell, like, that is so dense, that is just so, speak about verbosity, and he'll even like make up his own words and stuff like that, because his mother tongue is German, and then he writes in English, and but so to me, what really matters is the quality of the ideas. And so if somebody has that, I'm really happy to just kind of adapt myself and expose myself to the extent that I'm able. So yeah, I mean, but yeah, absolutely. He does come from academia. Like, he's had an academic career. At least that's, I wasn't really into his, I hadn't read his books before I did the interview. I had seen some stuff here and there, but I really spent 2 weeks doing a deep dive before that interview. And I did take away, I think, one thing is to keep my questions a lot shorter. I think I was kind of like trying to do too much and like trying to really, I don't know, provide value but so yeah, it's like kind of like what you're doing here is like just kind of like short bits and then let the guests talk. I'm very much still learning as an interviewer myself.
Yeah. I could see. I mean, I think that it was an interesting pairing, you two together, especially you not being sort of an adherent or long time listener. I think that made a really kind of dynamic conversation as well. Before we get into things like Mises, what's with the make haste slowly?
Oh yeah. It's something I found. I don't know, one of these rabbit holes. But make haste slowly, festina lente is a Latin phrase. Was used in the Roman times, and then later in the Renaissance, especially certain families just used it as like their family crest and their motto. And it's just this idea that in order to build something that of value, you need persistence, but also you need to be thoughtful about what you're doing. And so that it's like that weird contradiction that's encapsulated in Make Haste Slowly. And one of the kind of images that was used in the Renaissance was this a tortoise with a sail on its back. So it's kind of like the haste is like, yeah, the boat that goes forward, pushes forward, but then the tortoise is the slowness of it. So I don't know. I just thought it's something that me and my wife talk about a lot, about, how do we want to do this, and like how can you do it right? And usually it means it takes a lot longer to do something thoroughly and to do it right.
Yeah, it stuck with me because I think of haste makes waste a lot, and I kind of talk about that with my
Oh
kids.
yeah,
And it's just a
like shortcuts, like it's something that usually
that you can get burned
or like
by
one of these things, like cheap is actually more expensive.
Yeah,
those
exactly.
kind of things.
Exactly. And trying to teach
Yeah.
that sort of psychological lesson to the kids,
Well, yeah, and people used to use the Aesop's fables and stuff. Like they used to read those to the kids because that's mostly about, those kind of basic truthisms. Yeah.
So thinking about those truthisms, I want to get into this report you put out through Adamant Research a few years ago, but to me, it's just evergreen, and it's a way of looking at Bitcoin that I really enjoy. So the report is the Bitcoin Reformation, and you put a note in methodology here that I thought was interesting. You wrote, as an investor and analyst, I aim to identify socioeconomic trends and predict how they will evolve. I read, curate, and share. I separate signal from noise by listening to experts who I think have integrity, and yet a major challenge remains in that secular trends often are clearly identifiable only in hindsight. So what kind of solution have you come up to deal with that problem as an investor and an analyst, like by looking at history?
Yeah, looking at history. Well, because when historians write about history, like they by necessity, they have to summarize, they have to come up with a narrative, an overarching kind of dynamic, and also they have to refer to universal dynamics, like universal psychology, and kind of explain how this war started because these two people had beef and there was some betrayal and all that stuff. And so it's basically, at least to me, I feel like it allows me to become more aware of the undercurrents that are even alive in our society today, that aren't necessarily in the newspaper. If you read about what's going on, it's more like fact after fact after fact. So yeah, and every now and then I read some, I don't know, some history, some siege of a city, or some technological breakthrough of a couple hundred years ago, and then it just kind of gets my gears grinding about like, oh, well, maybe something kind of similar is happening today. And of course, nothing is going to exactly play out again, but I think that the mindset of the historian is really valuable if you want to think about like what long-term trends may be at play right now.
Sure. And so thinking about long-term trends and just the parallels, like what is the Reformation that you're making the parallel to here? What was maybe the background or context?
Yeah, I mean, yeah, I've been reading more about kind of the Middle Ages and how they evolved, and I mean, this is maybe taking it too far, but the Roman Empire had this structure where safety was provided by the army, and so that's why you saw these like lavish villas and these like kind of like sprawling like Pompeii and stuff. That stuff compared to the Middle Ages is very sprawling, because you didn't need to build a fortress around your village, because safety was kind of part of the Roman Empire. Like it was part of the services that was provided. Not saying it was that makes it right or whatever, but it was just the reality. And then as the Roman Empire fell, there were all these tribes that started just roaming around Europe. And if you look especially at the history of architecture, it must have been a huge shock to the entire population of Europe, because the way people started building changed radically. Like they just totally abandoned all these villas because it didn't make sense. Like you could get raided and you weren't safe. And so people started living much smaller, sometimes like within an old Colosseum, they would then build a village inside of that, like something that was like, imagine, like just used for entertainment as part of a bigger city. Everybody would just huddle together in that environment. And so the Middle Ages progressed, and that's kind of like how cities started to, evolve from these like smaller areas. And then I think that, Christianity became so popular in around Europe because it had a lot of the kind of like moral rules that fit in that environment, like of, being very frugal, like, that poverty is not a bad thing, sticking together, having this unity, like all that stuff allows you to kind of be the tortoise to defend against whatever may come. But then, of course, as time went on, Europe did become more prosperous. And so there was more abundance around and kind of a need for a new wind, right? New beliefs, more freedom, kind of like back what the Romans had, like more diversity. And so that monopoly that had developed from the Catholic Church, who was who had the Pope in Rome, and then this kind of like hierarchical pyramid structure that reached all the way into all the smallest villages where the priests were the representatives of the church. And that monopoly had become very expensive. They were charging a lot of money for, buying your way into heaven. Basically, you would pay the priest, and then, basically your family wouldn't go to hell if you. This is kind of the cynical way of I'm sure a lot of people would say it's way more nuanced. But so that is what, that in combination with the wealth that came from technological advancements and intercontinental trade in the Renaissance, that is really, I think, what created this clash, right? Whereas, like, why do we need this kind of like narrow monopoly? Like, why can't we just have our faith our own way, right? And that was the tension that created this Reformation, which really was about, in my opinion, primarily about freedom of religion, more so than like, the one monopoly versus another. Because eventually in Germany and stuff, part of these religious wars was that these different tribes fighting each other to try and get the monopoly. Anyway, so that's kind of my take on your question.
Sure. I guess you outlined some, I think, of the preconditions for Reformation there, in terms of then the rent-seeking monopolist service provider was the Catholic Church.
Right.
But what might be then, what kind of rent-seeking monopolist service provider are we facing now?
Well, I mean, the international monetary and financial system, which, you could say the Vatican is the Federal Reserve. Like, they are kind of the peak of the pyramid. You could argue like maybe it's the IMF, sorry, or maybe it's the BIS. But really, I think realistically, it's more the people that are in charge of the dollar. And again, similarly, you can kind of see the context, which I think Saifedean describes in his new book, The Fiat Standard, is kind of like there was a problem with the gold standard, where, once you transition to a more digital age, and especially because, of course, in 1913, nothing was digital, but the world was becoming way more international. Like there was global trade was just booming. Capital was just going around the world very quickly. And so, not to say it was the right thing to do, but it does make sense that, people started thinking like, can we not have a money that isn't anchored in gold? Because whenever there's wars, it's very easy to just go in and confiscate the gold. There's all kinds of stories about the gold reserves of central banks, where once the country was invaded, it was either confiscated or, like, I remember reading a book about what happened in Belgium in the Second World War. Like they basically put these things on boats and managed to get them to England. But then you get these countries that just because of their geography, amass huge amounts of gold. Like the UK has a lot of the gold that actually belongs to European countries, and so that gives them like an outsized position of power. So anyway, so it's all that, like it's kind of understandable that we did transition to this financial monopoly that ultimately is rent seeking, because if you create new fiat currency, you are doing seigniorage, which was, it's the same thing as what the kings used to do when they would ask for all the gold coins to come back. They would smelt them all down, and they would then give you back a slightly smaller coin with a new face on it. It's like, oh, I'm the new king. And so that's a way to levy a tax. So it's the same thing happens now with just printing more money. So again, we are at a stage where people still want the international trade, but they don't like the idea of the whole world being taxed for using the fiat money of one particular country, for example. That doesn't, what services are really being provided, especially if there is an alternative, which of course I think is Bitcoin.
Yeah, for sure. Now I want to read two pieces from your work. So a quote from The Marketplace of Christianity: temporary levies became permanent, and many new taxes were imposed on the wealthiest church members. Church documents reveal that sons and grandsons of heretics had to pay up for the sins of their fathers. The souls of deceased relatives could be extricated from purgatory for fees. And then you compare it to the current environment of quantitative easing, negative interest rates, and currency wars. The banking monopoly is arguably overcharging for its services. Customers are paying the inflation tax, which means it risks two forms of entry. The common citizenry may choose other dispensers of financial services, and the civil authorities may seek a different provider of financial services. In other words, given more adoption, we may see political entities embrace Bitcoin as a full-fledged money for all legal purposes. So bringing us to kind of Bitcoin, I mean, what were some of the catalysts for change during the Reformation? Technological catalysts for change.
Yeah, well, so during the 1500s, Nick Zabel has written about this. Like there were particular improvements to the hourglass and to navigational tools. I think it was the sextant, and basically it allowed sailors to not only go very far and explore, but find your way back, because that was often the challenge, not to get somewhere, but to, the winds and the currents are different, but so how do you get actually back? So you need quite sophisticated technology to do that. So they cracked that nut, in the early 1500s. So that's huge, because that allows for international trade. And then there was, double entry bookkeeping, which allows for people to run a business on an international basis. I mean, it had happened with the Medici family, which I think it's slightly earlier that they started. But all that stuff, and Mises has written about this too, that, under capitalism, the beauty is that you can run a large organization, and it can be it can consist of different parts, and each part can do their own accounting and see, like, is what we're doing actually sensible? Is there, this is our budget. Do we actually make more money than we lose, than we spend? And of course, some departments are just pure R&D, but overall, I think that actually makes sense especially if you have a business with different branches internationally and stuff. And so that became possible. And that was a huge driver of wealth, and created a new class of people, the merchants, who were not tied to this medieval system anymore. Like, they were basically independent from it because their wealth came from overseas, right? So the local lords weren't that much involved with all that trade that generated all this wealth. And then, of course, these merchants would create their own hubs, which initially Manhattan was one of those, just a trading hub. It wasn't meant to be this, colony or a heaven on earth, or, this utopian thing. It was just a simple trading hub, an outpost, basically. That's what it was. And so they had their own territories, And then they also had their own, the maritime laws. They had their own legal system as well. So yeah, it allowed them to be independent, and that drove the confidence to actually just do things differently, regardless of what the old way of doing things was. Which, again, like similar in Bitcoin land, if you have Bitcoin and you live internationally, you don't have a great need to actually have a bank account, or to actually, be, work for a Fortune 500 company in an office somewhere in a particular city. Like, not that it's not nice to have, but the necessity is becoming less.
That's fascinating. And you quoted Machiavelli in 1517, wrote, "Whoever wishes to foresee the future must consult the past, for human events ever resemble those of preceding times. This arises from the fact that they are produced by men who ever have been and ever will be, animated by the same passions, and thus they necessarily have the same result." And you also say, like, I'm talking about the printing press. What happened to the cost of a book during this time?
Yeah, it went, what was it again? In order to buy a book, a person in the Middle Ages, you had to work, well, even in the late, even like in the early Renaissance, you had to work a full year to be able to buy a book. And that went down to the price of a chicken. So like that is just huge leap. And that allowed even just regular higher middle class people to have, and in the beginning, of course, there wasn't like, you wouldn't necessarily buy a whole book, but you would buy a pamphlet, and that would be 10 pages or 12 pages. So yeah, that was just an enormous catalyst. Like if you read about the 95 Theses of Martin Luther, which was what is it, 1520 something, the first half of the 16th century, that thing just blew up. Like it just, thousands and thousands of copies spread in just a matter of weeks all around Europe. So that wasn't possible in the Middle Ages. Like information would not travel that fast at all.
And in terms of information, I mean, it's just remarkable now in the digital age. I mean, you think about the cost of a book, and I'm thinking a lot now about like the cost of a meme. And that's just the cost to make the meme, but to disseminate the meme, and how much quicker and faster, how many more people can get this idea. And you mentioned earlier in the show about sort of, you don't really notice day to day, you're getting the facts. And so I think, and you don't really see the larger trends of that you would get from a historical reading of the facts or interpretation. And I think right now we're seeing this crazy memes, true memes, fake memes, misinformation, or maybe not a reemergence of yellow journalism, but like we're just getting slapped with more information now. But you could see some narratives are breaking, but during this transitional phase, we don't know what the winning narratives or the new narratives or the correct new narratives will be. And so in this transition, it's very confusing because we're just getting hit with all these new facts every day.
Right.
And we're not really, it's hard to make sense of.
But I do think so. When the underlying economic structure of society, if that shifts, or if geopolitically, if the world changes geopolitically, having the internet will allow for new philosophies or new, because oftentimes people want kind of the comforting blanket of a belief system that fits the reality they live every day. And so if the world changes, some of these old belief systems, they don't feel comfortable. Like you're basically cold because the temperature has gone down and this old blanket is just not doing it. So you need something else. And so I think those belief systems, whatever they may be, are going to be able to spread very quickly. And so I'm kind of amazed reading about the 16th century, how fast things moved back then. I think now it could be even faster because we're all just so interconnected.
Sure. So then what do you think is, because you mentioned the merchants as a new economic class that wasn't tied to sort of the legacy, foundational financial infrastructure and incentives. So then what do you think is a new economic class now, or the people with something to fight for?
So in that report, in the Bitcoin Reformation, I said I thought it was the millennials, because first of all, I said like there aren't that many clear classes now. Like we don't really live in a class system anymore. But I mean, it's been 3 years now that it's come out. I actually think that I want to replace it with Bitcoiners, because I do feel like there is a shared ethos to an extent among Bitcoiners that, we talk about the lower time preference, we talk about not your keys, not your coin, like personal responsibility, the open source philosophy. The cypherpunks, were very, they had their own particular belief system, and that still continues in the Bitcoin world. So I think actually that fits the bill more to talk about Bitcoiners. And it's a bit weird because they're so spread out around the world. Like you don't even know, a lot of them are pseudonyms on the internet. So you can't really, see them together in real life. And as far as driving change, especially if you imagine, like right now, Bitcoin, all the Bitcoins in circulation are worth about $300 billion, give and take, maybe 400. But imagine Bitcoin going to $200,000, and then you're talking about $3 trillion, or if it goes higher than that, then all of a sudden you have an economic force that has $10 trillion that it can deploy. So yeah, that is a real, and especially in a context where inflation goes up a lot, and people that used to be like basically, there's a case to be made that in about 20 years or 30 years, half of the world's billionaires are going to be Bitcoiners, just because of the communicating vessels and how, wealth transfers happen.
Right. And so in terms of some of the technological catalysts for change that we also see today, the telecommunications, computation, data storage, open source software, cryptography, encryption, and I think social media is very important. And you wrote at the introduction, at the end of the 16th century, a ragtag group of rebel intellectuals and entrepreneurs founded a country on some of the least desirable land in Europe, so often flooded that it needed hundreds of miles of moats, while fighting an 80-year-long war against the largest empire in the world. So what were some of the strategies for defense and escape that they deployed during those 80 years?
Yeah, defense and escape, yeah. So if you look at, which, by the way, my motivation for this whole thing was nothing to do with Bitcoin. It was like, I used to commute between Bruges, where I'm from, and Ghent, where I lived also, and then the Netherlands, because I worked there. So I would go up and down with the train, and you could just see the culture change. Like, so weird. It's so weird. People speak the same language, but there's a huge, and I just always has been a mystery to me. Like, why is that? And so anyway, like studying the Reformation, like that's where the answer is, like, because before the Reformation, it was one country. You see these old maps, and they had a big lion superimposed over Flanders and the Netherlands, and that was the Leo Belgicus. It was just, it was just one country. That's why people spoke the same language. Sorry, I lost my train of thought.
You were going from on your commute from Bruges to
Netherlands. I'm trying to think what your question was, because I was getting there.
What are the strategies for defense and escape in that area of the world during the 80-year war?
So my point was that in the time before, and it was just a province of the Spanish Empire. That's what it was. So it was kind of ruled from afar by the Spanish Empire, Catholic rule. And so the heart of this country was Antwerp. That was the, even bigger, way bigger and influential than London at the time. Like, think of Antwerp as the London of that era. Like, that was the most powerful city. And so northern Netherlands, what we now know as Amsterdam and all that, it was not populated as much. It was swampland and all that stuff. It was kind of like the backcountry a bit more. And it wasn't until the Spanish really pushed into putting a lot of pressure on Antwerp that more people started to move north, because it was harder for the Spanish to actually control that area, because you could put people on a boat. They had very shallow boats that they can maneuver around in all this swampland. And so you could get away, or you could organize a raid or things like that. Or if the Spanish were besieging a city, which this actually happened several times. They would besiege a city. They had a land army. This is, by the way, there's a great, I know we don't want to get too nitty gritty, but there's a great book, The Army of Flanders and the Spanish Road. So this is the story of how Spain sent 140,000 soldiers by foot walking to Flanders to try and, have the Catholic reign remain, right, and kind of push back against the Protestant beliefs and people there. And so, yeah, so one of the ways that they would defend is they had all these moats, but then if a city is under siege, they could just remove the moat and the whole area would flood. And so all these Spanish soldiers would potentially drown or just be stuck in the mud. And at the same time, that allowed the shallow ships of the sea beggars to come in and then support the local troops, because they had a lot of money. There was a lot of money there. Like, think of it like a Taiwan or a Hong Kong. Like, there was huge amounts of, and then there was gradually also England also would send support for these kind of projects. And one siege that was not that's still not very well known, but at the time was like described as like, Carthage or something like that. It was just a huge siege. Was the siege of Ostend, and that lasted from, I believe it was 1601 to 1604, so 3 years. And it was just it still exists. Ostend is a little city now, but it was a kind of a town back then on the coast of Flanders. And the reason why they were able to hold on against the Spanish, even though they had occupied the entire territory around it, it was a little coastal town, is that it was constantly resupplied. But it eventually lost. 100,000 people died. The entire city was razed to the ground in the early 1600s. But so, yeah, so to me, the one of the parallels that I think is exciting or fascinating thing about is that the use of water back then is kind of analogous to how people can use cryptography now, because it's kind of like an equalizer. Like, it kind of doesn't matter how powerful you are. If you're up against these people that navigate water like it's nothing, they use the power of the ocean against you. So it doesn't matter you're the most powerful empire in the world. They lost their armada in the ocean as well, right, against the British. And so similarly today, it doesn't matter how many guns you have. If somebody has encrypted their wallet, you cannot get in there. You won't. You can't brute force a Bitcoin wallet. And so that was the cypherpunk's ideal. It really is at the heart of the cypherpunk belief, is that rather than waving flags in the street to protest things we don't believe in politically, we're going to use the power of cryptography to technologically defend human rights. And one of those human rights is just property. And that's what Bitcoin is, just physical, private property.
Right. And property is very important. But what about doctrines? What were some of the doctrines then that kind of were permeating society?
Yeah, so again, it's like I said earlier about, society changes and then people need some kind of belief system. And then, of course, you want that belief system to be able to be understood by all the strata in society, including just somebody who can't read. And so that's why I think during the time of the Protestant Reformation, you had these slogans, and one of them was sola fide. It's like, only belief is enough. So you don't need the priests to get to heaven. You can have a direct connection with God. Or another one was sola scriptura. It's like only the word of God. It's enough to read the Bible, to look at the words in the Bible. That's why they would translate the Bible into German and Dutch and all that. We don't need the priest who reads the Latin Bible and interprets it for us. So we can kind of get rid of the middleman. And so similarly in Bitcoin, you also have these and I think people kind of take them lightly. It's like, oh yeah, hodl, or like not your keys, not your coins. But there's really great power in them because they're so simple, they're easy to remember, and they really talk about the core values that are at work here. Not your keys, not your coin. It's like, you are responsible for kind of holding your own Bitcoin, and you don't need a middleman, right? That's what that communicates. You don't need to trust the bank to be in charge of your own wealth.
Right. You
And
mentioned
there's
trust
more.
there.
There's vires in numeris, and there's other slogans in the Bitcoin world that are very popular.
Yeah, this was so strength in numbers. I think you just mentioned that, virus and numerous. I don't speak Latin, but it seems like these calls of unity and conviction, both then and now, is that different than collectivism?
Well, I mean, to me, collectivism is like, how do I say? Like these memes are just technology in my mind, and so you can use them for good or for bad. And so if you use memes that are deceptive and that are gonna, like, there were plenty of slogans in the early 20th century that were all about, we don't need property and we can kind of have these agricultural communes, and and they built the Soviet Empire around memes, basically. And to me, that's more collectivism, where you're basically selling snake oil, like, or of course you're deceiving yourself, but anything can be turned into memes,
Right.
truth or deception.
Fair enough. And then, but back to trust, then it seems like trust in institutions is at an all-time low. I shouldn't say all-time low, but it's
I mean,
low.
probably, yeah, to an
Maybe
extent.
all-time low. I'm no expert. Well, why do you think we see iconoclasm and riots today?
Well, I mean, I think that the main reason is probably just that people have less. There are more people that have nothing left to lose. If you have an economic system that's so unstable, unpredictable, volatile, and then inflation kicks in, and COVID wreaks havoc, and then there's the Wall Street bets goes berserk, and AMC stock goes up 5,000% and then crashes 90%. So a lot of people are going to end up with nothing at the end of all that. And if you have nothing, then you have nothing left to lose, and then you might just join some kind of radical cult and start doing crazy stuff, including, and of course, for a lot of people, it's hard to kind of live a life where you have a lot of hardship and you don't feel like that. You feel this frustration or whatever, and then it just sometimes feels good to project that onto something or someone. And then maybe you're like, yeah, eat the rich. The rich are the problem, or we need to, I don't know, like in Belgium, I remember there's people who are mad at like people driving SUVs, and they would like start damaging SUVs because they're hurting the planet, or so I think it's something that always happens, but I do think that there's a phase shift in times of economic hardship. Like, why did the French Revolution happen? It's not like people were like comfortably sitting by the fire, having a jolly old time and decided to riot in the streets. Like, no, there was hyperinflation. They were desperate.
Yeah, and I think we're seeing a lot of desperation now, and I think it's understandable. I think inflation.
I mean, it's also like people feel to an extent they're right to feel betrayed, because they've been told that our system is great and everything works fine, and just kind of like put some money in your bond portfolio and in your this and that, and buy some real estate and you'll be set.
Yeah, I can see that, and very frustrating. And so that's a bit of historical perspective. I'd love to turn a little bit more to Bitcoin investing, sort of macro analysis, current affairs, Bitcoin's future. And so I probably should have done this earlier, but maybe you could tell us a little bit about like your background. When did you start investing or thinking about economics and, investing?
Yeah, sure. I wish I could be like, yeah, well, I bought my first stock when I was 8. And then, when I was 10, I was managing my dad's 401k, and none of that. I actually had a very kind of intellectual interest in Austrian economics. Like we discovered that, me and a few friends. And to me, it blew my mind, because Mises in the beginning of this his famous book is called Human Action. It's his most famous work. It's just hardcore philosophy, and he kind of just wipes the floor with determinism, and I had been struggling with a lot of those kind of things. So to me, that was like it just gained him so much credit in my mind. It's like, oh my God, like this guy knows how to think, and you know, but so of course, you know, from there he talks about how to think about economics and start getting interested in that. And I translated a work about the history of banking, like 500-page book from English to Dutch, and I also wrote like a pretty in-depth academic paper on the business cycle. Like that became like my fascination for
Is this
about a
the
year and a
article you
half.
wrote in Dutch about 10 years ago? Called
No,
The
actually,
Most
that was in
Important History
English. Like I
Lesson?
published it. It's called The Business Cycle: A Definition. So
Mm.
that was back in 2010, 11, I think. Which I should have paid attention to Bitcoin instead. But so yeah, so that was like I thought I was gonna do an academic career maybe. I just really didn't know. I just knew I loved all this stuff, and then gradually when around 2007, 8 is really when things started to rumble with the financial crisis. And so to me, I made the connection with all the history of banking, and it's just like, holy hell, this fractional reserve thing is actually falling apart. Like, you know, we are now at a crossroads where it's going to be between a rock and a hard place, right? Either we get no bailouts and all the banks go bankrupt, or we get forever bailouts, QE forever, and we're going to have hyperinflation. Like, so it's kind of like that moment of like, oh my God, like I don't want to be stuck here in Belgium when all this stuff goes down. I want to be able to have, I don't know, be able to send my kids to the school that I want to send them to, or I didn't have kids, but you know, that kind of thinking. So yeah, I just, from there on, I started writing about current affairs. And then 2011, I got my own financial newsletter, and then discovered Bitcoin. And from there on, things were kind of, you know, I became like a full-time Bitcoiner.
I always find it fascinating. I mean, I studied finance, and I got a master's in accounting, and I have a bachelor's in finance, and I love the subjects. You know, but I always thought my way would be I'd get a job, and then as I was working, like I was a little, you know, 10 years into working when the great financial crisis happened, and started revisiting things. I knew it was all wrong, and you know, but I didn't know Austrian economics at the time. But I was like, the only way I'm going to have an impact on this, I felt like, was keep my head down for another 20 years, and maybe I'll be the Federal Reserve chairman. But like, until then, like, how am I going to change any of this? And the more knowledge I was gleaming, the more angry I would get. And so the further I got from academic pursuits, the less interested I became in spending my time. I turned more attention to maybe history than economics, and because I felt like I couldn't enact any change. I just couldn't do anything about it, and I would just get more mad.
Right.
And, you know, I was like, okay, so I'm going to put, you know, some money into my 401k because I get the company match, and you know, doesn't leave me with much left over to start, you know, much of a portfolio on my own in this young age. So I better just keep working. And I would just get more frustrated with those things. I always find it remarkable when people just took on the pursuit continuously. And I'm in the pursuit now, but of knowledge, and I always have been, but like I got frustrated at some point. And like I just felt like more knowledge wasn't going to do me any good.
Right. Yeah. I mean, and I mean, I really sympathize, because that's why I dropped out of university. Like I was studying in Ghent and in Leuven, and even in Bruges, and yeah, just like I felt like, especially pursuing economics, they were trying to teach you how to think like to serve a politician. It's like, it wasn't like about fundamentally understanding things. It was more about like, how do we massage the budget, or like it was all very like kind of narrow tunnel vision type stuff. And but even with the bigger picture, I also felt really helpless. I thought like Europe is just doomed to become like an Argentina writ large, where they just every 10 years they have a huge financial crisis, and it's going to be like that forever, because they're not going to go back to the gold standard, I didn't think. So Bitcoin was like, it really gave me hope. It was just like, oh, like, and I discovered it in Argentina. Like, it was like the contrast was just, oh, it gave me goosebumps. It was amazing.
I remember in around 2006, I moved back from San Francisco back to the suburbs of New York City. And, I grew up in this neighborhood, and I remember coming back, and this is probably 06, 07, and everyone was getting like brand new siding, a roof, an addition, new basement, and they had 2 brand new cars in the driveway. And I'm like, that person's a teacher, their dad's and it was like, you just saw like, it was all HELOC, home equity loans and credit. And it just started like, I started doing just quick math everywhere. And like, none of this is sustainable. And
you as an accountant, especially, right?
Yeah, you just start running the numbers. And I'm like, I don't know what Joe's parents make, but I know they're not, Wall Street people, and they're driving a new Range Rover and Pathfinder, and they just got back from the Bahamas, and they're going to Disney World this summer. And wow, like, that's crazy. They're getting an addition on the house, and it's everyone's doing this.
Yeah, it's different if it's just a one family, but like everyone is doing it, and everyone's money machine is functioning exactly the same way.
Yeah. So that brings me to, I read somewhere that you were already recommending Bitcoin at $5.
Yeah.
And so this makes sense. You had a newsletter in 2011.
Right. Yeah. Yeah. And I guess, speaking about when I made my first investments, like when this publisher asked me like, hey, what about if you did your financial newsletter? I was like, so I gotta recommend stocks to people? I had never bought a stock in my life. So I was like, all right. So, but I did figure that if I can get the macro picture right, then it doesn't hugely matter what particular stock picks I have, as long as they're in the right category. And so my thinking was, which was premature, but still it kind of worked out, was like, okay, in an economic depression, what you need is liquid assets that are scarce. And the most liquid assets are currencies. And what am I thinking? Our currency. So we had a currency portfolio. And then I was also thinking about monetary substitutes. And so that's where I was getting into gold a lot. I was reading a lot about gold investing, and so a significant chunk of the other side was gold mines and gold royalty companies and things like that. So it's a very concentrated type portfolio. Although the currency portfolio is more like cash. But yeah, it was. Also 2011 was also the period of the sovereign debt crisis in Europe. So we had like Greece, looked like it was about to fall, and Italy, and so I think I definitely made some like rookie mistakes, and like in terms of, especially thinking about, like, for me it was great, like my age, right? For my age, like late 20s, like do go for risks and this and that. But I think that for my audience, which is more like in their 50s maybe, like that was like, oh, this is pretty spicy, pretty concentrated. But so yeah, so that's the context. And then I discovered Bitcoin. It was going down from like $30 in 2011. There was I think I forget, Wired magazine or something had one article about it. So it just spiked up, and then it did like a long decline. I think it bottomed at 2.5 or 3. And so as it was kind of inching back up is when I was like, all right, let's just put this thing in the currency basket. And yeah, that was like technically it was €5 was the recommended price.
I'm kind of blown away. On several levels here. One, I have memories from very young, and I'm not sure how much they're actual memories versus I've heard the story enough times that it's become my memory. From being retold the story, from like 3 years old, like my mom might have told, my brothers told me the story. I don't know if I remember it as well, or I just truly have a memory of created in my mind from them telling me over and over after the fact. But like I look back on Bitcoin, and I kind of have 2 memories of it. I can't prove them, especially it's hard to really recall something you've dismissed. I think that's an interesting notion.
Yeah.
But I kind of feel like I heard about Bitcoin in 09 and 010 once or 11, and I just thought, wow, like that's really interesting. It's like eBay has their own money, and you can go in this community and you could buy things that you could buy with this money that you can't buy with other money. But I didn't have a need. I didn't have a problem acquiring anything with my money, even on the black market. I just didn't have a need to use another currency to acquire goods or services. I didn't think about anything about speculating on this thing. It just didn't even like, wow. I was like, wow, they invented a new thing that they can trade with. And I didn't even think about what that meant. And then there's, I think probably in 2013, I probably heard about it again when it hit 1,000. I was like, wow, that thing that I didn't understand that had any potential to speculate on is now way cooler than I ever imagined. But now it's like really expensive in my mind. And
Yeah.
I don't got $1,000 for this thing I didn't even understand, and dismiss it again. And I think I just moved to Chicago in the middle of winter, I'm freezing, I'm like, fuck that, and I got to put on some heat and move on with my life. And then 2017. So yeah, I find it fascinating that not only were you interested in it, but that you would suggest it to others. And I wonder, anyone that you've suggested it to, are you still in touch with anyone that you've suggested it to? Because your audience, like you said, was probably not very similar to you.
Yeah, so I mean, I think I was really lucky in that I had I thought about it for 6 months before I actually recommended it. Like, I heard about Bitcoin. I remember like April 2011, something like that. And I was lucky in the sense that the year prior, I think it was 2009, I did a conference in London from the organized by the Libertarian Alliance. And they one of the speakers was David Friedman, the son of Milton Friedman, and his presentation was about a anonymous cyber currency, like this idea. And he specifically went into the scenario of like an assassination market. Like you could, if you had anonymous eCash, you could put a bounty on somebody's head, and then the assassin could claim that anonymously, something like that. So that was kind of like, in my mind. And then of course I was really kind of paranoid about Europe. And so I traveled in Latin America for altogether about 6 months. And so as I was going through and meeting people in Argentina is where I learned about Bitcoin. And so that was another touch point. And then of course, Austrian economics was a lot of the early Bitcoiners were familiar with that too. So that was another touch point. And then also for the newsletter, I was looking for something. I just felt like the buying gold stocks and gold, it just felt a bit like gold bugs. It was a little bit like an old story. And I love technology. And so, for example, I was looking into like low energy nuclear reactions, like cold fusion, basically. And I even like wrote about this startup in Italy, and they were doing these experiments, and turns out it was a scam. But I'd never recommended people. There was never any equity, but I was just kind of writing about it for the newsletter. So anyway, so that's kind of the context for me. Like I was looking for something, and it kind of fit my wheelhouse, and I was convinced that the financial system was broken. Like I was already convinced of that. So yeah, I was really lucky to be able to be there. Like, I mean, I went to the first Bitcoin meetup in Buenos Aires. It was like a barbecue with 5 people, like just all that kind of stuff. Yeah, really,
I can't imagine the patience, probably of a saint that you have to be here today in terms of just dealing with all the FUD and the repetition of the FUD and the cycles of the FUD, and being able to see through a lot of that very early on, understand what this thing is at a very high level, and then having to deal with just not a lot of people getting that over and over and over again. So I think you wrote an article in Dutch about 10 years ago called "The Most Important History Lesson That You've Never Been Taught About on Unsustainable Government Debt."
Oh yeah. Yeah, that was like about actually, speaking of parallels, it was like there's that little book written by Andrew Dixon White, I think, about the French Revolution and how it came to be, and the inflation, and And so I was just really seeing parallels with the on the monetary policy front. Yeah.
Yeah, and I mean, Lebanon, I think is going to revalue their currency like 90%. I think either tomorrow or
Oh wow, yeah, man.
yeah, or I should say
Curious,
devalue.
having horrible inflation, and the main parallel that I remembered was was the bailouts, like and the stimulus, especially stimulus and bailouts, is that they would just have a crisis, and then they would say like, oh, we're just gonna announce a big stimulus, and then for a certain amount of time, the economy looked like it was back on track. And then there was another crisis, and they would do another stimulus, and that led to the hyperinflation. So that was my worry in 2008, is like, holy hell, this huge bailout, huge stimulus. And then my big worry now with COVID was not only did they do a huge stimulus, but nobody was pushing back. You probably remember in 2008, there was actually serious debate, like, should we even do this? Should we even pay? In COVID, there was like no debate whatsoever. Right. The only question was how many trillion? And so that's what worries me, is that it's just it's an automatic reflex.
I remember the TARP, but then that was about 750 billion or 800 billion, which actually turned out to be a moneymaker for the taxpayer and the government, I believe, in the long run. But it was, I do think it increased, I forget what exactly called, but the risk of bankers taking on more risk for the sake of risk.
I mean, it's the equivalent of bailing out FTX. Like, oh yeah, let Sam stay. I'm not saying all these bankers are as criminal as Sam was, but I mean, like, or it's bailing out Genesis or something like that, right?
Yeah.
A firm who's been taking too many risks, who goes bankrupt and then gets brought back to life and becomes like a zombie bank.
Yeah. Well, I mean, the banks, I mean, maybe even JP Morgan alone has probably paid more in fines than FTX took in deposits. But, we've talked a lot about history tonight, and, I kind of want to get into what's going on today. And I mean, 2022 was a very confounding year for Bitcoin from a cycle perspective. I think most people, myself included, expected a bigger blow off top in that cycle.
Yeah, me too, actually. Me too.
A longer run. We're now in what seems like a bear market. The whole thing could be absurd in 100 years from now, though, when you just look at a chart, and the whole thing's been a bull market basically since the beginning. That's kind of one argument you can make. I mean, and then FTX, which was sort of maybe the culmination of, Luna, Celsius, and that stuff. But maybe not. Maybe there's Coinbase and GBTC and other things on the horizon. What have you sort of made of this current cycle and the egregious behavior we've seen in, I'll call it crypto?
Yeah, I mean, I think the crypto boom really started in early 2017 is really when it took off, and it never really went away. And I think I fell asleep at the wheel a little bit, whereas like I knew it was a problem, but I was just, Bitcoin is my world, and I know the people there, and that's my focus. And like, these shit coins, it's a lot of BS. And I'm not trying to be facetious, but like, just knowing the people that are involved, like knowing that, what it takes to do some real engineering. There's so much bluster about a better Bitcoin, and again, I don't want to come off as like dogmatic, like the NFT thing. Like there's maybe something there, but just everything was just so rushed. It was just bound to collapse at some point. And apparently, I think this is what's happening now. Like all these, unregistered securities that have been emitted, like, there's going to be, if you look at the .com bubble, like most of the lawsuits actually really kicked into gear like 10 years after. There's always this delay. And so some of the shenanigans of 2017 have not seen the courts, and they still will. It doesn't mean they won't. So yeah, I think this is kind of like, this was a highly needed creative destruction. Like we needed this stuff to fail because it was unsustainable, because it was a house of cards. And then so there's, I guess, two dynamics. One is scam tokens. You're just issuing scam tokens. You're pretending to build a company and it's just all hot air and it doesn't make any sense. You're just one of the 12,000 altcoins out there. And then I think the other one was just the leverage, that leverage upon leverage, everybody lending to everybody, that kind of like Potemkin village, the house of cards, that is now, luckily collapsing. I think it's very healthy. Honestly, I think it's very healthy. And it's also like, we're looking at it, like you're saying, right? If you look at the long-term chart, this is a structural bull market, 13 years. And so more and more people are seeing that. And that's why you get that overconfidence sometimes. And that you had it also on Wall Street in 1907. There was the panic of 1907, a big crash, because there was this huge period of prosperity before that. And it didn't stop the prosperity. It was just, a kind of a reality check where it's like, hey, you can't just be leveraged to the hilt. You have to maintain some sanity. So to me, this is painful, but also very much needed. It's
Yeah.
and also how many people are all of a sudden looking at Bitcoin again, right? It's because it's the one that is the most stable, the most mature, the least associated with all these scams. It's the one that makes that scales actually in a sensible way. Like, I don't think Ethereum is going to scale, like, really. I think it's like the Yahoo of today compared to the Google that is probably Bitcoin, like that kind of thing. So yeah, I mean, it's there has been we had big crashes before. Like, we had bear markets of 75%, 80% down. We had I think 3 or 4 of those already. So this is just another one, but it's a very interesting one and an important one, I think.
How do you think about surviving a bear market or investing in a bear market, whether it's you have a stack and you're wondering whether to deploy more dry powder and you're like, oh, we're up 50% from what could be a local bottom. Do I deploy now to hope? Do I wait? Is this going to go on longer? Or I've never gotten into Bitcoin. Is now the right time? Do I go hard? How do you think about these things? How do you survive it just psychologically?
Yeah, I mean, I think, and this is, of course, it's going to sound a bit hollow because we're in the midst of a bear market, but I think it's very important to prepare for them psychologically, to really be like, okay, look in the mirror, like, what if Bitcoin goes down 70% from here? Like, really imagine it. What is it going to feel like? Will I regret what I did now? And then you do those exercises, and then when it actually happens, you're better prepared. One other thing is to when you buy Bitcoin, I think it's very important to decide how long you're going to keep it and just stick with it. If it's going to be, and a lot of people that are maybe more like a boomer generation, they buy Bitcoin for their kids and their grandkids. They're just like, I don't care what the price does. This is like part of my financial legacy. That's why I do it. I think it's very healthy to do that because Bitcoin is extraordinarily suitable for investments that have very long time horizons. It just is. It's amazing. It's made for it. I think it's made for intergenerational wealth, really. So what you can do is do that, and then have a little trading portfolio on the side. And so, like, to not get sucked into the casino mentality where you're like buying and selling, and like, don't forget, if you're in the US, you're going to pay capital gains tax, which is, you're going to get hit with the biggest bill when the market is the most against you. Like right now, imagine you're down 70%, but you were YOLO trading the year before and you have a huge tax bill and you don't know how to pay it. So that's why you sell when you don't. That's the definition almost of a bear market, is when people are forced to sell. They don't want to sell, but they have to. So those are the kind of things you want to think about beforehand. And then, so if you're new to this market, I mean, it's always great to buy when we're down 70% from the all-time high, like the risk is by definition a lot lower. Of course, you can worry about, is Coinbase going to go down? Is GBTC going to liquidate? Are the Mt. Gox coins going to be sold? Or, there's so many things you can worry about. But a lot of stuff is going to be priced in already because everybody's just pessimistic and they feel disgust, and Twitter activity is way lower because people just left it. They just like, I don't even want to hear about it. So I mean, for what it's worth, but I think we're close to a bottom. Like we probably already saw the bottom, to be honest. We might have, some more bopping at the bottom. That can happen for a while, but think about a global macro, like from a global macro point of view, the Fed and all the central banks and the governments, they're still between a rock and a hard place. The only thing they can do is either print more money or default on their debt. It's just all there is. It's all you can do. The debt is way too high to do another Paul Volcker like in 1980, where you just crank up the interest rates and defend the value of your currency. That's not going to happen. 4% is probably the max, like as far as interest rates goes. 4 or 5 maybe, because already I think the US, like it's like 15% of the government budget is soon going to go to just paying the interest on the debt. Like imagine 15%. So yeah, anyway, so if you're hesitant, I would encourage you to think about Bitcoin as an insurance policy. Like, if you're going to insure your house against fire and other kinds of hazards, what is it again? Annually, I think it's like 0.5% or something of the value of your house goes to insurance. Well, so multiply that by 20. No, I think it's actually 0.25%. So multiply that by 20, you're looking at 5%. So maybe, again, just something to think about, 5% of your liquid portfolio is a way to ensure the value of your liquid portfolio for the next 20 years. Right. So, because if a cataclysm happens financially, you can be sure that Bitcoin is going to skyrocket. It'll melt. If everything melts down, Bitcoin is going to melt up.
Right.
So that's one way to look at it. Even if you're skeptical about, all these theories and these historical analogies, like think about it. What is my insurance against a crash in the government bond market? What is my insurance against that stuff? What is my insurance against a real estate crash? Because if these interest rates stay high, like I saw this statistic compared to when right now mortgage rates are about 6%, right? And I think it's only been 1 or 2 years that they were at around 3%. So compared to 1 or 2 years ago, a house that's worth $400,000 in the US, 40% less people are now able to afford that in like 18 months.
Right.
So that is just crushing the demand. And so anyway, I've been a long time bear on real estate. It's in my view, it's not meant to be a piggy bank. It only became monetized because our money is broken. That's why people pour all the money in, and because it's also subsidized, because that's the first way to get the money from the Fed is to get a mortgage. Anyway, I don't want to go on and on, but
I love it. It's interesting with real estate. I think that I agree with you. It's become a piggy bank. It's been monetized. It's terrible for society. It delays a lot of things. But I think they tapped into something there. It's primal, owning your home. And the irony is you don't actually own it. With property taxes, you rent it from the government and they just raise. And the better your home does, the more you pay in taxes. It's kind of a weird concept. Hey, I fixed up my home. The guy comes out. He's like, yeah, it looks like it's worth more. I wouldn't want anything to happen to your property taxes. And something else I think a lot about, and none of this that we talk about on the Bitcoin Matrix is financial advice. It's a philosophical show about Bitcoin. But, when I think about my own experience, coming in late 2017 as a speculator when I came in, and maybe that was the third time I was touched, but watching price run, I get in, price runs more. I think I'm a genius. Then you get into 2018, 2019, and you got to figure out, well, I'm no longer a genius, or I have to build the conviction in that I'm going to be a genius again. That I think is the thankful part of your first bear market cycle, where you got to figure out, am I holding a dead bag here and I want to get out? Do I not want to put in the work and I want to sell out, or I want to forget about it, not put in the work, or am I going to put in the work and maybe build a position or hang on to it or justify it? But you come out of that, and during the bear market, I remember it ran in 2019 from probably around 4,000 to about 13.8. And I remember a lot of people in my life that was when the light bulb went off. All right, I get it. Like, this thing's coming back. You're talking about it. I get what you're saying, and I can see it. The scoreboard is telling me number go up. You're right. And I had some people in my family who bought at 12,000, and then it went back down to 3,000 or 4,000.
Oh, wow. Yeah.
I don't remember if it was in 2019, but I definitely know March of 2020 it dropped to 4,000.
Yeah.
So I don't remember what happened in the interim. I think it went up and then down, but so now they're holding on to a dead bag again. And I think also about how when you're in that first bear market and you're learning your conviction, so most people probably don't put the pedal to the metal, and you probably they're like, I don't know if I'll ever get this chance again. The next bull run might be the last. But you have this notion of, well, maybe there'll be another bear market. And do I deploy my capital now? Do I wait another, what could be 2, 3, 4 years for this golden opportunity? It's a very, let's say Bitcoin goes up tomorrow or the next 6 months to 150,000. Drops right back down to 35,000 before the halving. Before it goes up to 500,000, drops back down to 50,000. I mean, those are big swings, and you could imagine at 80, 90,000, someone's like on that first run up, oh, did I miss it forever? Not knowing it could drop another 70,000 from a future high. I think that's what makes surviving. And 99.9% of the days of Bitcoin, it goes sideways or down. Like
Right.
it's the most painful asset to hold, except for those huge runs.
Gains are made in like 10 days,
right?
Of any given year,
right? Which just draws out the patience and the frustration, but the hope that maybe you'll get another amazing opportunity again.
So this is where study really pays off, because like it takes time to let these things sink in. For example, I know this has been beaten to death, this horse, but it's a fact that the world has about 20 million millionaires, and there are probably around,
I think it's like 50 million.
Oh yeah, at least 20.
And when inflation, it's gonna be like 100 million tomorrow.
No, you're probably right. 50 million millionaires, and let's say there's about 16 million Bitcoin in circulation, because a lot of them are lost and a bunch of them haven't been mined yet. And so by definition, only even in theory, only 1 out of 3, 1 out of 4 millionaires could ever own a whole Bitcoin. So it's just one of those things where it's like, does it really matter if you buy a Bitcoin at like 23,000 today or 100,000 tomorrow, or even if it's a fraction of a Bitcoin? If you think about it as generational wealth, like our kids and grandkids are going to be like, did you ever send a whole Bitcoin on the network? It's kind of like you were like, you bought an entire ocean liner full of containers. This kind of like, oh, you had 3 Boeing 747s, like you had them in your garage, like what? It's like, that's the kind of thing. Because I mean, of course, again, a skeptical listener can be like, yeah, rolling their eyes listening to us talking. But I really do believe the outcome of Bitcoin is binary. Like either it's going to be huge, like the internet, the TCP/IP protocol, everybody uses it. Linux, everybody has it on their phone, even if it's an Apple phone, it runs on Linux. Or it's going to go to zero, and it's going hard for 14 years now. It's the undisputed champion of the cryptocurrencies, is the most decentralized, has the most mining behind it, the most immutable, indestructible. So if you believe, in 100 years, there's going to be one digital currency or a few, I don't know, like just buy a little bit of Bitcoin. I don't know. It's one of these things where I think it's important to not overthink it too much. Like buy it, have some conviction, and I guess it's like know yourself. It doesn't matter what I've done, right? Or what you've done. Everybody's psychology is different. Some people just feel good about buying and holding lump sum. I sleep well. I don't care if it goes down 80%. I don't have to worry about it. Other people know themselves. I'm going to be like, I'm going to run up the walls if I do that. I'd rather buy 10% now, and then I'll spread out the next thing over the next 2 years. So it's important to know yourself. There's no kind of one answer, I believe. And also I think age is a big factor, right? If you're 20 versus you're 60 is huge difference.
I think age, I think also your own personal portfolio of revenue streams, salary, assets. I think the more you bring to the Bitcoin table, probably the less you'll be allocated to Bitcoin. Because you have a lower cost basis on a lot of these assets you already have. Maybe you want to retain them. It's hard to value, any sort of business. If you're an entrepreneur, you have equity in your business that's not allocated to Bitcoin. It's in fiat cash flows, even if you denominates, even if you reserve or store some of that wealth in Bitcoin. So it's hard to be fully allocated to Bitcoin. The more things you come to the table with, I think the less things you come to the table with, the easier it is to YOLO into Bitcoin.
That makes sense. That makes a lot of sense. Yeah, but usually the younger you are as well.
I think where it gets really dicey is if you're in that middle ground where, to maybe on the lower side, where you don't have a lot. And maybe a lot of your equity is maybe trapped in your home, and you have that really difficult quandary of like, do I sell my house and YOLO into Bitcoin?
Some people have done it, yeah.
Or
I've read stories over the years.
But I think there's the other side though. It's like I hold on to my house and I'll work harder. I'll take a second job and YOLO the discretionary income into Bitcoin.
It does encourage frugality, right? I mean, there's really people that have decided to have a lean couple of years to be able to.
Right. And so you have to decide how maybe lean you want those years to be, for how much of the upside you want on the other side. And I think the whole thing to that is conviction.
And that's where study comes, or that's where like a podcast like yours and other people like just really like let these ideas, because they're pretty it's radical stuff, and it's complicated. And it's a paradigm shift. So it really takes a lot of time to let things sink in. One thing I thought of mentioning is just as far as like thinking about Bitcoin as a part of your kind of like family's portfolio, is that right now, is this idea that sometimes people have an urgent need for cash, right? You have an urgent need for cash, and of course, Bitcoin is liquid. You can sell it, okay, but you can do that with stocks as well. But one of the things that I think is underappreciated still, especially if you have a bit of like 5, 10, 15-year horizon, is that Bitcoin is extremely suitable as collateral to borrow against, and so that means that you don't have to sell, but you can still access some of the value temporarily, which is how people used to use their life insurance policy, like way back when, before all this like crazy fiat system became so big. And then gradually that became people's home. It's like my home equity. I can always, if I have a medical expense, I can always borrow some against my home equity. And so if we're going to go into not only like a real estate bear market, but then additionally a liquidity crunch where, where just money is way less available, banks are less willing to lend against your house, it may be a good idea to have that other asset as a source of, of course, if you need to, you can sell, but then if you feel still relatively comfortable, you can borrow against it. I just think that's something to consider as well.
Yeah, I hear you there. I'd like to turn to maybe what we could expect for Bitcoin in the future. Maybe just kind of touching on, to start, like, what do you think about Bitcoin and whether its current correlation to real estate or stocks, particularly maybe tech stocks? But, I'm not saying it's directly correlated to real estate, but it seems like all these asset classes go up together and go down a little bit together, and we haven't seen Bitcoin decouple. What are your thoughts on when or if Bitcoin will decouple?
Yeah, interesting. Bitcoin seems to respond not so much to CPI inflation, but through the thing that precedes that, which is excessive increases in the M2 money supply. So basically, when the moment they print more money is when the smart money starts to move into Bitcoin. Like there's definitely a correlation there. And then when people notice it in the supermarket, there's a delay there. It can be months or sometimes years before the CPI inflation responds. And so that's why a lot of journalists like to say like, oh, Bitcoin and it's not an inflation hedge. It's like, well, think about it for a minute. So that is, I think, correlation. There has been a correlation with tech, although I think it's more the other way around, where tech was its own dynamic, and then crypto got tacked on to tech. So all the Silicon Valley types, with all their, all the gains from their IPO exits and stuff, started piling into crypto. And then in the slip scene of crypto, Bitcoin also got, kind of pulled up because people just don't really know the difference between the two. But I think that Bitcoin is starting to correlate a bit more with gold lately, which is interesting. And then what we see with like Bitcoin is also just an asset that's being traded on Wall Street now. And so traders will just trade, S&P 500, trade Bitcoin. And so in the short run, you see long periods of relative correlation, and then you see Bitcoin decouple. Like you've seen it every time during a bull market. And it's the same if you compare Bitcoin to NASDAQ, to the NASDAQ. It's the exact, it's a slightly different pattern in the long run, but it's ultimately long periods of correlation, and then if Bitcoin breaks out and leaves the rest in the dust. So it's a bit of a distraction to look at those charts too much. It's Bitcoin is it's the door in the theater that you run to when the theater is on fire, and it's a small door, and that's why you get these melt ups.
That's interesting. What do you think differentiates successful speculators?
Yeah, that's interesting. Successful speculators. I mean, I read like 2 or 3 of the Market Wizards books where they interview, and I guess my favorite little book from when I was 20 is like the Richest Man in Babylon. It's like this tiny little book about how to become rich, and it's very simple. It's basically you save money, and then when you see a business venture that can make a return, make a strategic investment. So I think speculation is really about seeing where the market is mispricing things, where people are just wrong. Like the majority of people is very wrong about something. And often that's reinforced by political realities. Like there's a kind of a subsidy at work, but that subsidy is going to run out, or, things like that. So I think that's where the mind of the speculator can be really valuable. And so it's weirdly, it's maybe similar to the difference between like epic fantasy and like historical novels. It's like, or historical fiction. It's like they're 2 different genres, but the more you think about it, they're kind of just on a spectrum. Like there's not really, but once you have dragons, then it's epic fantasy. It's like, well, there's a lot of fantasy in scientific, anyway. So I think it's similar. Like when are you a value investor and when are you a speculator? If you zoom out a lot, well, supposedly you're a value investor, but so I don't know. I don't know whether I'm a value investor or a speculator, to be honest. But at least it resonates for me that speculation has something to do with the market being very wrong about something, rather than like, oh, I'm just looking at the books of this particular company and looks kind of cheap, and so I'm going to buy it, and then once it's priced correctly, I'll sell it again. But yeah, and so we're kind of been forced to be speculators because these distortions have become so huge, and people used to be able to just save dollars. Like, can you imagine? Like you just had dollars in the bank and that's it. And then you had a life insurance policy, which was a way to protect your kids and your family. And that was it. You didn't need to speculate. But now everybody's forced to speculate because the money, you get taxed every year. The inflation tax comes around and takes 5, 10, 20%.
Yeah. It's egregious. I want to read a little bit from the appendix of your piece, just to kind of outline how quickly things can move in retrospect. In 1602, the Dutch East India Company is founded, among others, by Dirk van Oes, an Antwerp immigrant. Van Oes also helps fund Henry Hudson's 1607 expedition to North America, signs his name on one of the world's oldest stock certificates, and co-founds the Amsterdam Exchange Banks. In 1624, the first Dutch settlers arrive on Governor's Island outside of Manhattan. In 1643, Isaac Jogues estimates Manhattan's population at 500 and the number of languages spoken there at 18. I mean, I can't get over that. In 1643, 500 people. In 1664, New Amsterdam is conquered by the British Army and is renamed as New York. The population is 9,000 at the time. In 1777, New York adopts the first state constitution without any religious establishment and becomes the only revolutionary state that does not have a religious test for office holding. So, I mean, an incredible amount of change that happens just in New York. And I think it's a sort of, we use New York real estate, or I've used it, and I know Surfer Jim has used it as an analogy for Bitcoin, as like buying a skyscraper, in Manhattan in the 70s. And everyone thinks now, like, why wouldn't you buy that? Or buying a building in the Bronx in the 70s when the Bronx was burning. They weren't obvious then, and you probably had to sit on it for a long time before you even broke even, because of all different kind of issues with rent control, regulations, crime. No one knew these neighborhoods would become desirable. But unfortunately, I think with real estate, which is very different than Bitcoin, I mean, you have maintenance, property taxes, and then you even have sort of fashion risk and what could be the decline of a desirable location like Manhattan or even just the inner cities as we move into the digital age. So along those lines, how do you think about valuing Bitcoin today and into the future?
Yeah, because it's a great analogy, this idea of like, buying Bitcoin is like you're buying real estate on Bitcoin Island, right? And so, however, there's 21 million square feet or whatever you want to think about it. And then the difference is that, you're not just talking about one particular city in one particular place. It's a globally accessible protocol. Anybody with access to an off-the-shelf smartphone can directly interact with the Bitcoin network. So it's almost like you're able to buy shares in the TCP/IP protocol, and the year is like 1992 or something. You can buy shares in the backbone of the internet, like that kind of thing. It just blows my mind. So I guess it kind of goes to like, okay, well, so how can you value Bitcoin? All right, how do you even think about that? What is the addressable market? What is the addressable market for global money? It's just, and so I think the best you can do is just look at monetary aggregates, like how many $1 trillion are there of kind of like relatively stable currencies in the world, and then extrapolate from there. Or you can look at monetary substitutes as well, which is real estate, but that's really tricky. So I want to kind of stay away from that. I'm trying to think of some other, I mean, of course, government bonds are basically a substitute as well, because people would want to hold cash, but then the inflation protection is why they like the bonds. I mean, if we're real, like, it's really about that. You're not really thinking about doing a speculative investment. Most people just have bonds as an inflation protection. So, and then I guess you can also look at like, oh, Bitcoin is great for remittance. So how big is the remittance market? And it could take over that. So I don't want to like, I mean, I wish I had all the numbers in my head about like, oh, this is how that extrapolates. But roughly speaking, I think a future value, inflation corrected, because I think, Bitcoin's price is going to be infinite because the dollar is going to go and lower and lower and lower. And so in the long run, the value of one Bitcoin is going to be infinite in dollar terms or euro terms. But so inflation corrected, I think it's really okay. I always say to people like, yes, I believe it's going to $1 million. I think it's going to, and I've said it for years, it's going to $1 million, because that's kind of a number that's like, it's a couple houses, it's because I think that, and again, I have looked at these comparisons and stuff. Like, I'm not just pulling it straight out of the air, but there's a limit to how useful these how these extrapolations are. But I've read some speculation about how it could go to $5 million per Bitcoin, and I don't think that's crazy. Even in today's value terms, I don't think those projections are insane. But again, it's going to be a long road to get there, and Bitcoin's values and value proposition is going to grow as well. And that's something to keep in mind. Like, it's not like Bitcoin's use case in the future, when it's $1 million, is going to be the same as today. Like, there's going to be, this is like, we're talking about raw Manhattan land, and there's like 9,000 people living there. That's today. So we got to think about what layers are going to be built. What are the skyscrapers that are going to be built on top of it? The railroads, the air, the airports and all that. So all those layers, we kind of have to imagine. So one of them is already known, I think, is the Lightning Network, right? A few years ago, everybody was saying Bitcoin can't scale. It can only have 3 transactions per second. It's ridiculous. How could it ever compete with Visa? Like, I mean, I swear, like, look up these old articles. Like, it's all there. Everybody almost, and that's why, part of why these shitcoins proliferated, because they were all saying like, oh, we do more transactions per second. And so, like, people in the know knew the Lightning Network was coming and just needed some time. And now it's here. And you can do millions of transactions per second. And you can do transactions. They did a competition to do the smallest Lightning transaction possible. And the person winning a prize was the one who managed to send the least amount of money. And I couldn't even tell the exact number, but Adam Back calculated that the value was less than you would pay for 1 grain of sand if you were to buy sand in bulk. That's how crazy the Lightning Network is. So that's just one layer on top of Bitcoin now.
Yeah, I mean, we can't comprehend or imagine where it's going, but we can look backwards. I've done a couple of shows. I had Lawrence Lepard mentioned in 1980. Gold represented about 20% of the world's wealth.
Interesting, yeah.
Right now, and he kind of figured out, it's like gold available for sale, gold stocks, gold miners, gold ETFs, plus Bitcoin. You're talking about $6-7 trillion, and you got 450 trillion of other junk out there. And if just 10% of that chases Bitcoin and gold, hard money, and then you can, I talked to Luke Mikic, and we looked a lot about the multiplier effect. So for every dollar that comes in, I think Willy Woo and Will Clemente.
That was recent, right? Yeah.
Yeah. So I mean, you're looking at like 2.5x per dollar that comes in on the multiplier effect, and then this is not even including derivatives of $1.5 trillion or $1.5 quadrillion, I should say. And so he came up with a conservative estimate of 64 million per Bitcoin. But what really blew me away, and Greg Foss, I think, is smart to say, you should never really give a price target and date. You can give a date, right, or you give a price target, not both. Right. But Fidelity did come out with, I believe, 1 million price target by 2030 and 1 billion by 2040.
1 billion for one Bitcoin?
1 billion per Bitcoin. I don't trust verify. I did Twitter search it, and I saw some links, but I haven't done the full research. And I think it speaks to like when money dies, and
yeah, I mean, again, if you assume the money's going to die, you can project 1 billion easy, right? Bitcoin is going to be 1 billion Reichsmark? Is like, yeah.
Right. So yeah, so then you get into, is it 1 billion purchasing power or 1 billion of this thing that doesn't buy anything? But I think at the end of the day, what it's really saying is Bitcoin will be money, and we won't be buying and selling it. We'll be just using it to trade for goods, and there will be no price for it because other things will just be priced in it. But I think along the way, I think we will see more volatility going forward than less. And I think it'll be, and I think Bitcoin can even overshoot these things before it stabilizes.
Sure. I am a bit skeptical about the what is the word again? The effect,
the multiplier effect. There are counters to that because of, even derivatives or paper Bitcoin. And there's ways you can kind of say, oh, well, you're going to multiply it on this end, but maybe that was
not on the other. Yeah. I mean, what I was going to say is basically, if you look at global wealth today, I think a lot of it is not real wealth, actually, right? Because what is a government bond? It's a promise to pay something in the future,
right? And that's what it doesn't account for.
It's kind of like with shitcoins. It's like, oh, all of crypto is now worth $5 trillion.
Right. So it says, okay, right. So it's saying like, okay, 300 trillion of real estate will be thrown into Bitcoin. But what you're saying, and what I think you got a valid point there, is it's not worth 300 trillion, and they're not going to get that. They're going to get a cut. and
And
they're
the same
going
for
to
derivatives. Like we always
right.
kind of like our eyes like just water seeing these numbers, but a derivative is just a bet, and a bet has
Right.
two sides
The
to it. And
flip
so,
side is the supply, though. So if
right,
Bitcoin is not for sale, it doesn't matter how much money is chasing it. So at some point, so many people are going to be holding it for future gains and trades, and there will only be so much for sale. And I mean,
there will
it's
be
just
hackers though.
sure,
Yeah, I
yeah.
hear you.
So
No, I mean, like I'm always one for hearing, like new ways to project particular value. But I guess I just feel comfortable in the 1 to 5 million range, and yeah, it gets a little bit dicey beyond that.
well, it's interesting because a 1 million to counter what I'm saying. So 1 million per Bitcoin puts you in the gold range, and we've never seen. Yeah, so
Oh, gold
gold
in
is about
1980, you mean?
no, I mean, so gold is about well, $500,000 Bitcoin gives you about $10 trillion of wealth,
Oh, I see.
and that's about what gold is worth if you include central bank gold. It's about 10,
500,000. Okay, so 500,000 is
right?
gold parity.
And so a
I see.
million is like double that,
Yes.
right? And but by that time, gold will probably worth 20 trillion as well. So you're kind of getting par with gold, and
I
we've
do
never
think it should substantially outpace gold. I agree. That's why I'm more
right, but
thinking
gold will go up a
five.
little bit.
Yeah.
So but at that point, you're looking at something that's never exceeded hard money in the world. So we have gold is hard money. It was, and it has
Right.
Lindy effect, and it hasn't gone past 10 or 12 trillion. So we've
Yeah.
never actually had hard currency in that stratosphere. So it's kind of uncharted territory. I mean, we have 100 trillion in fiat, but we don't have 100 trillion in hard money. So that would be kind of interesting to see when it breaks through that wall and how it reacts. But kind of the opposite of this is what happens if Bitcoin doesn't win? It goes to zero. What kind of
You
world
mean
are we
like in
looking
what
at?
scenario would it?
No, but what kind of world are we looking at? Like,
I mean, to
so
me,
Bitcoin loses, it goes to zero, and we're stuck with fiat and whatever that means, CBDCs
yeah,
or
it's hard for me to think about because I feel like, and again, who knows? Maybe I'm just a Bitcoin zealot, but I just feel like the genie's out of the bottle. Like the code is out there. Like just what is the scenario where Bitcoin goes to zero? Like it's almost like saying like let's just assume everybody stops speaking English tomorrow. What are you going to do then, right? You studied your English and you got your English PhD, but you hadn't thought of this one, right? It's kind of like what kind of gotcha is that?
right.
So I don't know.
I hear you.
I struggle with yeah.
But it might be dark. It's interesting. You mentioned Yahoo earlier, and I remember studying in grad school. It's like Google came out in like 1998 or 97, but it was two guys with an algorithm, and but Kleiner Perkins and the smart money starts piling in. But it took 5 years for Google to surpass Yahoo in market value.
Oh yeah.
And Yahoo had 40 people in a room like codifying the web by hand.
Yep.
But they got the marketing budget. They're doing Super Bowl commercials. They're raging on Wall Street. But the smart money knew Google would catch up, and surpass. And when it did, I mean, it was lights out. So then my final question for you is, if you could orange pill anyone in the world, who would it be?
Oh, that's interesting. That's a fun one. If I could orange pill anybody in the world, who would it be? I feel like I would want it to be like a kind of like I would want it to have great symbolic value. I would want that the person doesn't matter that much, but that it's kind of like, whoa, this kind of person, that's insane. So that's why I wouldn't say like, oh, Elon Musk, because everybody's like, oh yeah, he's another tech bro, it's just the next one. I guess I feel like he doesn't really fit the profile. I do think Jeff Bezos would really turn a lot of heads, much more than Elon Musk. Like if he were to like somehow do this huge Bitcoin splash, and he's already big in Texas, he has a lot of land and all that, that would be amazing. What if he's like, oh, let's build a Bitcoin vault on the moon or something crazy like that? That would be cool. But then other than that, maybe if it was like I wouldn't even need to know it in the newspaper. If it was like some like really old money or something that just like people that have this like long-standing network and somebody in there who has like great credibility, who's like, I just did a Michael Saylor, like I'm all in. And I just, and it's going to happen eventually, you know, that'll really turn heads. Yeah, I mean, I think governments, but that just seems such an obvious one, right? I mean, if the German central bank starts buying Bitcoin, like, yeah, sure, like that'd be amazing.
It,
Yeah.
it was interesting you said Bezos. It made me think of Zuckerberg and Facebook, and I really thought if they had rolled out Libra as a dollar, just a straight dollar that was backed by government treasuries or whatever, that they would have been able to Trojan horse a currency. They would have been able to do the United States bidding in terms of monetary colonialism, but then at some point they could switch it to a basket of goods, you know, after they got clearance to do the dollar, and
I thought of that.
one day eventually have their own currency. And I think Amazon's in a similar boat where, you know, they could do the rewards and a lot of commerce in their own, you know, blockchain BS currency. And then eventually, but you know, the obvious one is eventually like, why wouldn't they do this in Bitcoin down the road? I mean, not obvious, not now, but I think, you know, the transition would be, you know, the Amazon unit to the dollar to the basket of goods to eventually fully backed by Bitcoin. It'd be nice if they got there quickly. I think of, you know, my orange pill is always
Amazon doesn't have an army though. I think that's
well,
one,
I think if they rolled out the
challenge.
dollar, they would have the United States Army behind them, because when they go into countries where, because they could go into countries where we don't have the dollar, especially social media. Could have been in China, could have been in all these countries where we don't have the dollar, but they could be using that app maybe.
But if Amazon has a
dollarized.
stable coin, and the stable coin is actually more stable than the dollar because they kind of throw in some other assets in the mix,
right? But
they should.
Right.
That's a threat to the dollar, right? I mean,
right. So I think they should have backdoored by just being a stable coin dollar, and then eventually, oh, now it's 99% a dollar and 1% this.
But that's where the Fed is going to start feeling threatened. The Fed is going to want to do that.
Right.
I think the Fed is going to create a stable coin that's gradually more backed by stuff. Because that's what they did in France as well. Like they were like, oh, we confiscated the lands of the church. Now these lands are backing the currency, and it's kind of like one of these desperate moves at the late stage of fiat, you know.
Yeah.
But I just it's hard for me to see a private company do that, not because they wouldn't want to. I think they do, but just because they're directly competing with the government.
That's why I think they should have done it as a dollar backed thing, like a tether to start, to get the support. And then once they have the network effects, they'd have more leverage.
Yeah.
And I think instead of going to immediately to the basket of goods and threatening the dollar, they should have been more gentle.
I agree.
And I think Amazon has that opportunity in front of them where they could just roll out a digital dollar, and then maybe get people to get more comfortable with it, and then degrade that dollar to be more of their unit of currency.
I don't know. I it's hard because I think we're a little bit of like, this is like late stage consumerism as well. So I think that Amazon's power is going to wane a bit.
Fair enough. Yeah.
Because people won't be able to buy a lot of shit anymore.
I see what you're saying. Yeah.
So I think maybe for the long term, what if Bezos just like gradually sold off all his Amazon stock and just like built this giant pile of Bitcoin and then fund some crazy stuff with that? I don't know. It's fun to think about.
We'll see. I think he's too state sponsored to do that, but we'll see. You know, but in terms of orange pillar, I thought Michael Jordan would be a good one because he's kind of Teflon, and you know, he doesn't kind of come with a lot of baggage.
Yeah.
And be like Mike. Greg Zaj said maybe Biden, but I think what you're getting at.
Who? Biden?
Yeah, maybe Biden. You know, president.
Biden buying Bitcoin.
Yeah, you know,
You
I mean
the
that.
son?
No, either one. Well, he meant the president, but I mean, you know, if you could orange pill Joe Biden, I mean, that would probably have a lot of impact, whether you like him or not.
No, I would. Yeah, I agree.
Yeah, I mean, it would just be tremendous impact. But you know, sometimes when I ask it, I almost cringe because it's like, we don't, as Bitcoiners, it's decentralized, and we don't want to have a leader, and we don't want to have a spokesperson, and we don't want to have like, oh, well, Joe Rogan said buy Bitcoin, all the normies will buy it. It's like, that's kind of lame. And I think what everyone's getting at is like, yeah, what would be inspirational is like that person in Tiananmen Square. Like if like there was a new Tiananmen Square situation where the person like somehow like used Bitcoin to defend themselves, and the world saw it, and it was a nobody. But that nobody somehow like used Bitcoin as a defense, even if it was in that situation where they just held up like a fake Bitcoin coin, and like somehow the tank stopped. But the picture of that, or would be sort of the decentralized dream of like orange pilling the nobody who orange pills the world, versus like we orange pill this person with the credentials, because the credentials aren't really what we're excited about.
Or if there's like a crowdfunding thing, like there's some guy in trouble, like Nelson Mandela is like imprisoned, and you do like a global crowdfunding and you somehow get him out of prison with like some crazy helicopter thing.
Well, that's what the Canadian truckers, I think, we were hoping for.
That was kind of that, yeah.
I don't know if we did the whole rollout as effectively as we could. And there is no we, but you know what I mean? Like it didn't go over as much as we hoped. But
yeah, I mean, I remember seeing a tweet about someone who was just doing a tour in North Korea, and they were like, look, I just sent Bitcoin across the border. It happened already. Like people have been,
that's wild.
Yeah.
So I can't tell you how much I've enjoyed this conversation. I'll leave it to you for any parting words and let people know where they can find you and your work.
Oh, I'm just Tuur Demeester on Twitter. Just plug my name in, and that's where I've been the most active. I'm slowly working on a Substack, but that's not live yet. So yeah, I'm excited to get more into long form again, because I had a hiatus, and I'm working on some stuff. There's new stuff coming out about Bitcoin in particular. So yeah, and thanks for this conversation. I like when it's I don't know. I like the diversity of the questions, and like I enjoyed your perspective on things. So yeah, this was fun. Thanks.
I appreciate it. Thank you so much. It's been so dope. Thank you so much for checking out this episode. Again, make sure that you're subscribed to the Bitcoin Matrix podcast so you don't miss out on any fresh and new content. I want to thank Tuur Demeester for taking the time to come on the show. I also want to thank our sponsors, River and CoinKite, for powering the show. I'm not sure you guys know this, but I do this all on top of my day job, so your support means a lot to me. And if you dig the chats, please subscribe, write a 5-star review, and share a link to the podcast with your best friends and family. That's the best way to spread the word so I can keep grinding out thought-provoking conversations about Bitcoin. And thank you for listening. Greg Zaj, Clemenza from the Meat Mafia, Eric Kaysen, Joe Burnett, Luke Broyle, CK, and Gary Leland are all up next. Keep learning, keep stacking, and stay laser focused out there. This is Ced. Peace.